The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, commodities trading in Asia is at a turning point. With China driving global demand for base metals and precious metals like gold, the region is uniquely positioned to reshape the global commodities market. Yet, benchmarks, trading platforms, and liquidity remain largely dominated by players outside Asia. As Hong Kong seeks to establish itself as a global hub for commodities trading, leveraging its proximity to China and its mature financial infrastructure, the question remains, what needs to be done to seize this golden opportunity and position the city as a key player for BRICS countries and beyond? Well, to help us explore the steps Hong Kong must take to secure its place in the global commodities landscape, joining me today is Gregor Gregersen, who's the founder of Silver Bullion Group. Gregor, welcome back to the show.
Thank you for having me.
Thank you so much for joining us this afternoon. Gregor, how is Hong Kong currently faring in its ambitions to become a global hub for commodities trading?
Well, Hong Kong has been and is quite important because the Hong Kong Exchange and Clearing owns the London Metal Exchange. And the London Metal Exchange is the biggest exchange when it comes to commodities, futures, forwards, and so on, when it comes to base metals. And that means that Hong Kong has been playing a pretty important role in trading overall. But I think where I want to go now is to do more with physical in particular.
I see. Well, Hong Kong has long been a financial gateway to China as well, but its role in commodities markets has been limited so far. What progress do you see in its development as a trading hub?
Hong Kong does not have much physical space, and it's quite expensive to have land. So when it comes to base metals, there's only so much you can do. But I think Hong Kong is very well positioned when it comes to gold. Gold is very small, and the financial side is very important. And I think that's where Hong Kong really is going to play a very important role, driven by geopolitics.
I see. Well, Asia accounts for the majority of global demand for metals, with China alone, consuming more base metals than any other country. How can then Hong Kong leverage its proximity to China and its role as an international financial center to attract more global investors and drive trading activity locally?
Well, this is where it gets very interesting because there's been a recent drive by Hong Kong to really push for gold and precious metals in particular. John Lee is the CEO of Hong Kong. He did an address to the nation, and he mentioned that. He mentioned we need to catch up to Singapore, of all places, and he mentioned our world in particular. So, but as we looked more into it and the reasons behind, this is really a drive which started with the Communist Party in China. And the reason why we believe this is the case is coming back down to geopolitics. If we take a bigger picture, we have to realize that China has been reducing the amount of US dollars it is holding. It's down about 22% over the last 2 years. And it has been increasing the amount of gold. It does this in two ways. It essentially keeps the price of gold higher in China compared to outside of China. So companies that have a license to import can make free money by bringing physical gold into China. And at the same time, they're not allowing for net exports of gold. So if you are a jewelry reseller in Singapore and you want jewelry to be made in China, you have to ship in 50 kilos of gold and you're going to get 50 kilos back, but you cannot get 51.
Right.
And so China is this black hole of gold going in. And so why does China need Hong Kong in all of this? Well, the US is placing more and more sanctions on China. Essentially, the cost of retaliation for China in a financial sense is becoming lower. And that's, I think, partly why China is reducing US dollars, increasing the amount of gold. In particular, the United States right now is putting embargoes on semiconductor material to China. There are national champions like Huawei, which essentially have been heavily attacked by the US. And you have the tariffs with Trump and so on. And these things are coming into place. China might at one point decide to retaliate with a currency war. And the way this would work out is that China could essentially start dumping its US dollars. At the same time, it could prohibit Chinese companies from accepting US payment. And because of the size of China, so it would mean that a lot of trading partners to China would have to sell US dollars. So it would cause a huge selling pressure on the United States dollar and might cause a currency crisis.
Right.
And because the United States is essentially quite divided internally, it is also a country whose fiscal debt has just been exploding. And geopolitically, the US is becoming more isolated to its policy. So all of these things are putting us in a situation where the United States is becoming weaker. And China has increasingly, I think, the option of doing something like this. And if they were to do it, then essentially the United States will look at it as a financial attack, and it is probably sanction every Chinese company which doesn't accept US dollars. And then you have a split financial system, and you have trade which will stop because you need payment to trade.
Right.
And in a scenario like that, if you have gold, you can have a way of restarting matters because gold is apolitical. It's not dependent on the US or China or anybody else. And if you store it in a neutral country, and that's where Singapore is ideal, then you could essentially have, say, countries store gold in vaults, and once per day they can net out gold transactions as a way of transferring wealth between the non-compatible financial systems. And so that's for Singapore. Where does Hong Kong come in? Well, we're all aware of BRICS nowadays, and Hong Kong could essentially become a sovereign gold hub for BRICS countries. Because a Westerner might not want to store their gold in Hong Kong. But if you're a Russian, then Hong Kong suddenly might seem pretty good as an alternative.
Right. I see. Interesting. Well, London has historically dominated gold trading, backed by its vast storage capacity and sophisticated logistics. Do you think Hong Kong's investments in, expanding gold storage facilities and warehousing capabilities are enough to challenge London's position, or are there other critical areas it needs to focus on?
I think Hong Kong is very well aware of what it's doing because its focus is very much on, I think, three key points. One of it is the financial infrastructure around it, the gold ecosystem, which is key. Then you have the vaulting itself, which is more foundational sort of matter. And then you have the jurisdictional part of it. So Hong Kong is essentially, I believe, doing is if they were to go to a sovereign country, and that sovereign country is currently storing their gold in London. Recently, Venezuela wanted to have its gold back, but London said, I don't recognize your government. I'm not giving you the gold back. And that's causing some other countries to start thinking, well, maybe I should get my gold back because maybe in the future I will not get my gold, given what happened to Venezuela. But if you're a country, let's say Brazil, for example, and you decide to take your gold back home, then it's not always as easy to sell it. And if you have a sovereign debt ratio of, let's say, 10% in Brazil, these are just hypothetical numbers, then you could actually take that gold, put it in a gold hub, take a loan against that gold, and maybe you only pay 5% interest. And if you put $1 billion worth of gold there, that's a lot of savings.
Right.
So if you keep it at home, lenders wouldn't really trust you. So it would make sense to not keep the gold at home, but find a place where to put it. And so if Singapore or Hong Kong were to offer to Brazil a safe storage, offer, let's say, 4 or 5% interest for collateralization on that gold, then why shouldn't the gold, go to one of these new locations?
Right.
And geopolitically, that will make the hosting country very powerful.
I see. Well, as you mentioned earlier, Singapore has emerged as a strong competitor in commodities trading, particularly through its focus on digitalization and tokenization. So how can Hong Kong, differentiate itself to attract both institutional and retail investors in the BRICS and Asian markets?
I think that there's a limited scope for the retail investor and institutional so. I think the sovereign market is really, really interesting because of what I just mentioned earlier. And one important thing to consider is when you look at defense of a country, one of the 6 pillars in Singapore, for example, is economic relevancy.
Right.
If, let's say, we have another pandemic, and let's say that Singapore is hosting $1 billion worth of Brazilian gold, would Brazil stop sending beef to Singapore in case of a pandemic? Probably yes. Yeah. Probably because you have that gold. And if that gold were to be taken and will be securitized on the SGX, for example, and can be traded in secondary market, then if the Norway Sovereign Wealth Fund starts buying some of that Brazilian debt in Singapore, Norway would also want to make sure everything is okay with Singapore. So being such a gold hub is buying new economic relevance and is geopolitically very important. And so I think in the case of Hong Kong, China has started seeing that and is pushing matters to develop Hong Kong into such a center. And I think Singapore can do the same, a little bit different target market, but I think it's a great time to be in gold.
Right. A great time to be in gold. But, Gregor, despite Hong Kong's financial markets being mature, commodities trading, often requires a more specialized approach. What should Hong Kong do then to, develop to improve liquidity and attract greater trading volume in the metals market?
One key thing, in my opinion, is collateralization of loans. So currently, London, as you mentioned, is the most important center. They have over 8,000 tons of gold. I believe they do about $45 billion worth of trading per day. So extremely liquid. But when it comes to collateralization, meaning you use your loan to get a low-interest loan, that's not a very well-developed market. In the industry, there's what's called repo transactions, but that's basically us selling it and buying something back. But having a straight loan against that gold, that's sort of an opportunity right now, which I think a well-determined jurisdiction and financial center can go and grab. I think over the next 5 years, we'll see one of these or two of these centers, be developed and really built on that.
Okay. Well, then, do you think Hong Kong's regulatory environment is conducive to commodities trading, or are there gaps that need to be addressed to ensure investor confidence?
Well, Hong Kong has formed a working group to research these things, and we've been partially contacted by this working group, so we have a little bit of direct experience. And they asked me similar questions. What do you need, or what should we do as a government to get somebody like you to build a vault, in Hong Kong? And I basically told them, well, there's not much you can do because you're already doing everything. Hong Kong does not have a GST tax. Hong Kong is already building that financial infrastructure. And they're asking that question, meaning they're already trying to attract these entities. But what is making Hong Kong problematic sort of jurisdiction from our perspective is the fact that it is a two-system, one country. And China has come in and has changed a number of the local laws. And that really has made it a lot more worrisome to Westerners on whether your private property is really going to be protected. And, we have the geopolitical issues. So it's really something that Hong Kong cannot change. But they can take advantage of it because it just means they have to go to a different target market.
Right.
If you're talking to the Westerner, they might not want to go to Hong Kong. But you talk to BRIC country members, they might be a lot more open. And nowadays, BRICS, we now have Thailand, Malaysia, Indonesia, Vietnam, they all joined BRICS. So in the future, we might be seeing these countries having to decide between Singapore and Hong Kong.
Wow, very interesting. Great insights there. Well, before we let you go here, Gregor, looking ahead, as Hong Kong positions itself to, serve BRICS countries and Asia's growing demand for metals, what would success look like in the next 5 to 10 years? Could Hong Kong eventually rival global players?
I believe so. I believe that driven by geopolitics, really. If it wouldn't be for geopolitics, this would be a very boring industry.
Right.
But given the potential of disruptions that we might be seeing in the last 10 years, gold will serve as a fallback. And I think the jurisdictions will have positioned themselves to take advantage of that, are going to become very important. I think Dubai, Qatar, Singapore, Hong Kong are sort of the entities that are sort of in the lead of becoming such new jurisdictions.
I see. Well, thank you so much for your time and your insights today, Gregor.
Thank you.
Thank you. That was Gregor Gregersen, who's the founder of Silver Bullion Group. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.